Markets are clearly worried about a bunch of different factors, some of which are political, others are things like rates and energy prices, but the underlying tone of the market is one towards more volatility. You know, fun fact, the VIX only peaked in February once in the last 20 plus years. It seems to have peaked this year in February, but the seasonality tells you that we can expect more volatility, particularly in August and October, when it tends to more normally peak for the year. So we haven't seen peak volatility for the year by any means.
Jeff, what do you think about the headlines out of Washington? And if the market reacted to them at all, it appears to have taken them in stride, even though usually anything that comes out that suggests turmoil for the president can spark a sell-off.
Well, Dick Russell, my friend that passed away a couple of years ago at Dow Theory Letters, used to say, when the president's in trouble, the equity markets are in trouble. Now, I talked to friends. I lived in D.C. I've got pretty good contacts on the Hill, and I think the thing that affected the markets today was that Mnuchin and Larry Kudlow, your pal, and I know him,
sure,
were getting a stiff arm from China, and there was some worry about that.
Now wait a minute, because this afternoon it seems like we haven't gotten a lot of headlines out of the summit, which we know took place. And are you saying that the fact that they didn't get that is a positive for the market?
Early today, they were getting the stiff arm from China. Now, maybe things progressed, and that could have turned the market around. I was on this show many times in January warning that our models, for the first time in 18 months, were saying February represented the first window of downside vulnerability in a long time. And we raised some cash, and we put most of that cash back to work the week of February 6th. The selling climax low, the failed throwback rally, and the subsequent undercut low of February 9th. And we're still treating that February 9th undercut low as the low at 25.33 until proven wrong.
Nick, we mentioned a couple of factors there. There's trade concerns, but at least there are talks going on. It's perhaps an improvement from where we were, and also concerns in Washington. Are those things that you think are overlooked by U.S. investors, or are they already priced in?
You know, it's very tough because fundamentally the stock market shouldn't care all that much. Until something affects consumer confidence or interest rates or global growth, it shouldn't really matter to fundamentals. The twitches that we see intraday, like today, and others are really just markets trying to game how much risk there is. But until those things happen, stock market doesn't really respond and shouldn't respond in a more fundamental long-term fashion.
Have we seen, though, a bit of a pullback in growth? I mean, particularly if you look in Europe, the CPI, again, a bit softer than people expected. So is there an explanation for this downside, albeit perhaps different from Washington?
I think that's an important feed into it, but recall that 70% of the S&P's revenues are in the U.S. Only tech has 50% outside revenues away from the U.S. So it is still very much a fundamental U.S. story for U.S. stocks.
And before we go, Jeff, we did yesterday with the Dow closed down 10% from those late Jan highs. So you still feel comfortable where you bought into the market in early Feb, even if we still have a little bit of a soft patch here? I
think we're still in a secular bull market. They run 14 plus years. I think we've got years left to go. I think these people that are talking about peak earnings are not looking and drilling down far enough. That the economy, I've said it to you before, is stronger than a garlic milkshake. Everywhere I travel.
Have you had one of those? Because I mean, that doesn't sound very appetizing.
I made it up.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.